Hey everyone. Recently, I've been getting a lot of questions about private money and capital raising, structuring the deal and the ins and outs of that, even securities laws and stuff like that. So I just want to put a quick video together for you guys, talking a little bit about private money, private investment, and raising capital. Some different ways that I structure that. And then my A1 biggest tip is right here in the video. So if you guys like that type of information, private money, insider tips, and stuff like that, then go ahead and click the subscribe button below because we'll be posting a series of private investment tutorials, if you will, on our YouTube channel here. And you won't want to miss it if you have any interest in raising private money. So let's dive in real quick. First things first, I want to talk about the different structures of private money and how I've raised millions and millions of dollars over the years to be able to invest in real estate. One way is to have a private money program. I think in the early days, people talked about, well, just sit down and see what the investor will take, right? Talk with the investor and see what type of returns they need. Well, often they don't know. Moreover, you're always floating and maybe the deal's good for them, maybe it's not. Instead, I highly recommend you have a program, a set return that you pay investors very consistently so they can compare what your investment returns are compared to the stock market, other investors, and those types of things. So, not a floating rate, what will the investor take, but here's my program, here's what I pay, here's the ROI, here's the cash flow of it, here's the time frame. This is why I do it. In fact, so what I did is I've bought millions of dollars worth of real estate with none of my own money this very exact way. And I put together a private investment guide is what I do. It kind of has a bio, some case studies, some different things of what I've done. Be careful what you put in this. You're definitely going to need some disclosures regarding Securities and Exchange Commission law. Be very wary of that. Don't just put together a private investment guide and start sending it out because that could very well be illegal. Be careful about offering returns or cash flow. There's all sorts of language that if it gets in front of somebody that wants to give you some problems, they can do that if you're not careful on what you put into those things. But the key takeaway here in the program is I have a program. This is what it's about. This is what the return is. Maybe it's for you. If not, maybe it's for somebody that you know that wants to make some great money secured by real estate. So having that fixed program, I normally do that as a fixed return investment or what would be a debt investment. So they are not actually equity partners in this type of structure for me normally. They're just a private lender. And it really works well when you're able to combine it with seller financing. All right, the next thing I want to talk about is a joint venture. Maybe this is a bigger deal. I normally consider joint ventures on deals, say, over $1 million. Maybe even over 500,000, depending on how much capital we actually need. The reason you go to more of a joint venture look on something, or at least the reason I do, is because depending on what you pay your private investors, like in your program, once you start borrowing more than $500,000, you get up to $1 million or more. Um, it's very difficult to service that debt. It can keep you up at night if you're not cash flowing on your property. But if you bring somebody in as a joint venture where they actually have an equity position, you can either structure a much smaller debt service or really no debt service at all. This would be a performance-based investment. So you don't have that heavy debt service up front and you give away some equity on the back end. It's also a great way to get large fees up front if you want, because you're giving away so much back end equity. When you're just doing it on a fixed return or a program, large fees up front are pretty much fees you're financing for yourself. So it's something to keep in mind. Another thing that I've done that has worked really well, especially on larger projects, is an LLC and selling membership shares to that. kind of like a joint venture, but there's typically more partners. And again, guys, I can't stress enough that you need to talk with a securities attorney to make sure that you're structuring these the right way and make absolutely sure that you're not out there breaking the law looking for investors. For example, often people will put out there, hey, I got a deal, I'm looking for investors, do you want to invest? That's actually illegal. I don't know if you knew that, but you can't just go out and start marketing to any old investor you want to fund your deal. That's illegal. So be very, very careful about that. But an example where this might work good is, let's say you got a handful of friends, family friends, business associates, and you found a larger project, maybe something that's not going to cash flow super strong in the first year or two, but has great long-term value. This is the time to put those guys together and go in and buy it as a group. So what you do is you're just going to value the project itself, and then you're going to create shares. You can pick 1,000 shares, you can pick 1,000,000 shares, right? And you're just going to take all the shares and you're going to divide that by the value, and then you can sell that off, and your private investors can actually buy those shares and buy in to the membership of the LLC that way. Now, if you're the sponsor of this and you're not putting your own money in, you need to be really careful about how your accountant is going to look at this. There's various ways to structure this. We'll get into this more in future videos. So again, click the subscribe button below for the Extant Investment YouTube channel, and we'll get into a little bit deeper level on how to structure those so you don't create a taxable issue for yourself. For example, we'll just use some easy numbers. Let's say it's a $100,000 deal. Let's get real simple, right? You need 100 grand to do the deal. You both, this would be for joint venture or for the LLC. You guys both go into the deal. You don't bring any money because you're going to manage it. You're the pro investor, all of that. The other person brings in the $100,000. What you may not realize is you could have very well just created a $50,000 tax obligation for yourself. Think about that. If you're 50-50 partners, you came in with zero capital, they came in with 100,000 in capital, your CPA is going to say, hey, that's a $50,000 gain for you, and that is taxable. There's ways to structure it where that's not going to be the case, and we'll revisit that on this YouTube channel here. So subscribe if you're interested in that. All right, so moving on from the LLC shares and membership, let's talk about funds. I get a lot of questions about what type of fund to create and when to create it and why. I've created a pretty good sized fund in the past, and so I've got some good insights on that. First things first on a fund. Unless you're going to raise, in my opinion, $3 million or more, I would stick to one of the other programs, because a fund is pretty intense. I mean, you're going to need a private placement memorandum, op agreement, subscription agreements, all these particular things, and it's going to be anywhere between $10,000 and $30,000 to create it in the first place. So if you're not raising at least 3 million, 5 million or more, a fund is probably not necessary for you. But let's talk about it a little bit. There's two types of funds to consider. One is a close-ended fund, and this would be a fund that you just raised to maybe do a single transaction or maybe two specific transactions. You're not going to continue to raise. Let's say you have a $5 million fund cap and you're only going to raise $5 million. Then that's a close-ended fund. Once you hit 5 million, you're not taking any more money. You're just going to deploy that 5 million and you're done with that fund. So that's one way to do it. Another way is an open-ended fund. An open-ended fund means you're going to continue to allow people to invest in it and get these particular returns. So if you were just going to raise, say, $10 million and look at various investment opportunities over the year, 18 months, something like that, then an open-ended fund might be something that you would consider. So there's some different structure stuff for you guys. Now let me give you my biggest tip. The number one thing I see when people are raising private money, the biggest faux pas, if you will, the biggest mistake that they make is they're asking for a loan, and their demeanor is asking for a loan. Hey, can I get a loan to do this investment? Can I get a loan to do that investment? And that's absolutely the wrong approach. For example, when I'm talking to a private investor, I let them know I have a fantastic opportunity. And believe you me, they are lucky to be able to invest in the deals that I'm doing. So it's not a loan, it's an investment opportunity. And it's something that you're putting in front of them. And if they want it, great. But if not, the next guy will take advantage of that opportunity. So you're not asking for money or asking for a loan. You're presenting an opportunity to somebody that otherwise doesn't have it. Most of the people that you'll talk to about private investment don't have the time or the skill set to go out and find the deals like some of you guys that are dedicated to being sponsors of these type of deals do. So come with that mindset, not will you please loan me some money, could I get a loan, all of that. Come with, hey, this is a fantastic opportunity, and even if it's not for you, you may want to tell somebody, because we're going to make some serious money with real estate, and that's what I do. So all right, guys, if you like what you heard and you want to continue with some of these private money lessons and other real estate investment tips and tricks, click subscribe here, and every time I create a new video, it will alert you so you can check it out. So until next time, happy investing.